Hello guys and welcome again to my channel. So now let's talk about the accounting for cash and cash equivalents. Okay, now as a matter of, what do you call this? As a matter of overview, the cash and cash equivalents is actually three topics. The first one, the most difficult one, is the cash in bank. There are three items on the cash and cash equivalents if you are going to ask me. So again, the first one, the most difficult one, is the cash in bank. The second one is the petty cash fund, as well as the last one is the cash equivalents. Okay, so on the cash in bank, it is very clear from the name itself that is your cash in bank. And normally this account title has been very much popular. It's because of the Imprest System, whereby a company should already deposit intact all of its receipts or collections from customers, from everyone, from any other source. As long as it is a cash receipt, those cash receipts should be deposited intact with the bank. Okay? And aside from that, under the Imprest system, if you wanted to have some disbursements, you need to do it by check. So, which is why we have the cash in bank already. Okay? So, now, as to the petty cash, as an overview, petty cash is actually a small amount that was taken from the cash in bank so that it will handle small expenses or minute expenses for the business. And we have the last one, the cash equivalents. So the cash equivalents are actually a very short-term investments made by the company. Okay? So very short-term investment, which means, if you wanted to be specific, those are investments that are taken 3 months before maturity. So it means if you're going to invest in a certain business opportunity and you know that after 3 months it will be converted back into cash, that is cash equivalents. Okay? Now, that's the easiest one. But we will not start with that one because again, if your job is to eat frogs for the day, you should do the biggest frog first so that you will become, that's a technique actually, that's a mindset, so that you'll be able to become, what do you call this, very productive for the day. Okay, so we're gonna start with the cash in bank. Of course, the cash and cash equivalents is measured at face value, and also they are presented first on the statement of financial position in the asset side. On the current assets, it's the first in the line because it's already cash. It will be followed by items that are easily convertible into cash also. So that's the measurement, and that's the, what do you call this, presentation of this cash and cash equivalents. Okay? What we're gonna talk about is, again, cash in bank. Okay? So let's talk about that. So our style for now is a point of view style. I'll have storytelling, but we're gonna use point of view style and sample illustration style. So I have developed a very comprehensive problem for this one so that you'll be able to perform reconciliation later on, because there is a bank reconciliation in this cash in bank issue or topic. Okay? So, what is this? First off, if we're talking about cash in bank, there are two books that are recording your deposits, your cash in bank actually. So we have the first one, which is the bank. So bank is recording your deposits, we call that receipts, and then they are also recording your disbursements, and we have ending. So that's a fact. Okay? I guess I need to economize the space. So yeah, that's it. And then we have also the books the books of the company. It has also beginning balance, receipts, disbursements, and the ending. So aside from the balances, they're recording also the receipts and disbursements. Okay? Now, before we go further, your point of view is the reconciler. I don't know if that is a term in English, but as if that is a real term. So you are a reconciler. Okay? So if you're a reconciler, actually, you will develop this bank. We have beginning balance, we have receipts also, we have disbursements, and you have ending. And we have also the books. You have the beginning balance, you have the receipts, you have the disbursements, and the ending. Question. Before we go further, actually, if you wanted to really master the reconciliation of the bank, um, first question, why do we need to have a bank reconciliation? Again, there are two people, as if, let's put two people. This is as if the bank, and this is the in charge, and this is the bookkeeper or the company accountant that maintains the books of the company, and you are the reconciler. So it's as if there are three of you. So these two might have recorded something that was not reflected in the other one. So, which is why we need to have a bank reconciliation. Okay? What do I mean? For example, if we're talking about collections from customers, of course, if the customers pay immediately to the company will record it first. Okay? Now, what if such collections are not yet deposited in the bank? Of course, this person in our point of view, will not be able to record it. Okay? So, there are collections that were recorded in the company because the customers went to the company for payment. So, it was recorded in the books. But, if it is still undeposited, that will not be recorded by the bank. So, that is what do we call deposit in transit. Those are receipts that are recorded in the books but were not yet deposited. Okay? So, there is something that was recorded here but was not yet recorded here. So, that's the purpose of reconciliation, in which, if you're going to reconcile that, since it was already recorded in the books, you have to record it in the bank, the deposits in transit, and they will be reconciled. Okay? So, that's why, again, how important is bank reconciliation? It is important, it is because there are some items that will be recorded by the books which are not recorded by the bank, and also there are items recorded by the bank that were not recorded by the books. So actually there are three types of them. Like for example, the first one is the deposit in transit for the collections that were recorded in the books and not recorded in the bank. We have also outstanding checks. So what are those outstanding checks? Those are uh, disbursements recorded in the books because the company has issued already a check. Okay? So, it was already recorded under the disbursements. It was recorded in the books. However, since such check should be encashed by someone who was paid by the company, they have to encash it. If they will not encash it, of course, it will not be recorded by the bank. That is what do we call as outstanding checks. Checks that the company has already written and paid already to the payee. However, the payee did not yet encash it. So, that's another reconciling item. So, outstanding checks are already recorded as disbursements in the books but were not taken up by the bank records. Okay? So, let's continue. Um, there are also items that are recorded already by the bank but which are not yet taken up in the books. Like for example, if the customers, without informing the company, they paid using cash transfer from, for example, uh, a cash wallet, e-cash or e-cash wallet, or e-wallet, something like that, or bank-to-bank transaction. But again, the customer did not inform the company. Of course, the bank will record it already as receipts. Okay? So if the bank will already record that as receipts, and the books, and this person is assigned in the books did not know about it, of course, it will not be reflected in the books. So that is what do we call as credit memos. Those are normally the additions to your bank account and were recognized by the bank, but without the company knowing that there is a an addition, okay, in addition to the bank account. So again, that's credit memos. So why are they called credit memos? Actually, if we're talking about receipts, you could say these are credits to your account. So additions to your account actually are considered as credits of the bank. It is because you are acting as a creditor of the bank. So the debtor is the bank, the creditor is you. So meaning, the bank sees you as a creditor. So if this is your cash in bank, that is your asset. For them, that is their liability to you. So whenever they say that your account has been credited, that means your account is increased. Their liability has been increased. And you, on the other hand, your asset increased, your cash in bank. Okay? So that's credit memos. Those are increases in the bank accounts which were not yet reflected in the books. Okay? And aside from credit memos, the bank may also deduct something from you without the company knowing, without this person knowing. Those are what do we call as debit memos. Like for example, you noticed immediately on your passbook or on bank statement that there is a decrease on your bank account. It's because they charge some service charges. So they recorded it as disbursements already. You did not record it. No, no, not you. You're the reconciler, basically. The company did not record it as a disbursement because they did not know. Those are considered as debit memos. So, again, let me repeat that. Why is bank reconciliation needed? It is because there are items that might be reflected by the bank without the books taking it up. And of course, there are some items in the books which were not taken up by the bank records. Okay? And of course, the last reason is that they might encounter errors. Okay? So, if they encountered errors and they did not yet correct it, you have to reconcile. You have to correct the errors. Because at the end of the day, the beginning balances of the bank and the books, the receipts of the bank and the book, the disbursements of the bank and the book, and the ending should be the same. Okay? So on the reconciling stage, you are just going to know what are the items that were not recorded by the bank that should have been recorded by the bank, and you need to know the items also that should have been recorded by the books which were not yet recorded. You put it there, and if they are all complete, they should balance. Okay? So that's bank reconciliation. Now, I mentioned, I have a problem. So I'll just put it here. Okay? And since I cannot see that, I cannot see all of it, I'll just get my tablet. So take a look at here. I don't know if you can see it, but we have an illustrative problem. BBG company maintains a single checking account for the period ending January 31, 20x2. The accountant identified significant discrepancy between the cash balance reported in the general ledger and the balance reported in the bank statement. It is said here that on the books or the book records, the company's cash records show a beginning balance of 2481, 345, and it has a receipts of 2954, 250, and a disbursement of a lot, 5772, 120, which is why the ending is a negative balance, which is impossible. Supposedly, having some negative cash balance is impossible unless you have issued a check without knowing that your balance is already zero. If that is the case, there will be a negative balance or bank overdraft. So, this is a problem, which is why the more reason that we have to make a bank reconciliation. And actually, in the bank, according to here, the beginning balance is 2.6. So, there is a discrepancy immediately. Alright? And then, the total deposits are 5.2 million. Another discrepancy. Okay? And we have the disbursements of 4,217,500. So the ending result is 3,582,500. So you can check this, guys, using your own calculators if ever. 2.6, the beginning balance, 2.6 million plus 5,200,000 and minus disbursements of 4,217,500. Is it really 3,582,500? And on the book records or general ledger, you could also try 2481345 plus the receipts of 2,954,250 and the disbursements of 5,772,120 if it will result to 336,525. And if you did that, I'm hoping that this is correct. If it is not, you put it in the comment section. But this is the problem. Okay? There might be items that were not considered by the bank, and there might be items that were not considered by the books. Because why is it? Their ending balances are pretty much different. Okay? So we have to reconcile. Okay? Now, before we go to that, this is very important. Let me tell you this before we move forward. This person, the ones in charge with the bank records, are actually recording. If you have already seen a bank statement or a passbook, their entries are just like this. For example, you started on January 1, 20x6. Okay? So on January 1, 20x6, you deposited 100,000. They're going to put that on the credits. 100,000. And then there is also debits. Debits is for the deductions. Like for example, if you withdraw something, it will be reflected here. And then we have the balance. And that is a running balance. For example, there's no debits because you did not withdraw during January 1, 20x6. There will be a running balance here. But if you withdraw, for example, after 2 days, 20x6, you withdrawn 5,000 for personal purposes. So, 100,000, it will become 95,000. That's how they record this. So, is this very important? I have a very important point to make before we move on. And that is, sometimes the bank um, tends to make errors. For example, if your company, in our illustrative problem is BBG, if there are some companies that are similar to you, and then there are withdrawals or deposits from that company that is very much similar to you, sometimes the bank will tend to credit it and debit it to you. Okay? So for example, this 5,000 is actually not yours. It is from BBN, BBG, PBJ. So our problem is BBG. We have another company which has a similar name as us. So the withdrawals of BBG has been charged to us. So what will happen? Normally, in order to correct this mistake, like for example, if January 5, 20x6, the bank noticed that this is not actually ours, or we noticed and we called the bank, this is not ours. So they will put a credit so that this will not be, uh, the effects of this one will not be felt by your balance, and your balance will go back to 100,000. That's how the bank corrects their errors. Now, let me remind you of this. If they erroneously make a debit, they are going to credit it. They will not erase it. Which is why on the bank statements, you will not see that there are erasures on the debits and the credits. So if they are wrong in crediting, they are going to debit it. If they are wrong in debiting, they are going to credit it. Something like that. That is very important when we move forward. Okay? So that's how it is. This is unlike here on the books. On the books, of course, if there are errors, just like this one. For example, there are disbursements that were recorded. Instead of the bank, it's in the books. But it's not really a disbursement. Okay? So what will we do? We can erase it. This person can erase it. Alright? So now let's move forward. Let's go to the illustrative problem. So on the reconciling, I have 3 steps before we go to the problem. What is that? First off, if we're talking about problems, written problems for your exams, because every there are statements that will help you reconcile the bank and the book records. So whenever there are statements, first off, you have to understand the statement. So that's the first one. Because you have to imagine, how did this person and how did this person taken up such issue, okay, or reconciling sentence? How did they take it up? How did they record? Okay? Step 2 is you have to decide which is correct. Okay? Is the bank correct? Or is the book wrong? Something like that. Or is the book correct? Something like that. Because if you identify which are correct, by the way, it is to be noted that this person in the bank and this person in the books can both be wrong in some issues. Okay? But still, on step 2, you need to know which is correct, who is correct, or are they both wrong, before you go to step 3, which is the reconciling phase. So we're going to practice that. Okay? We're going to practice that bit by bit. Okay? So take a look at here. So because of this, I'm sorry for the pronunciation. Because of these discrepancies, a reconciliation must be carried out to determine the correct balance. Because what should be in the financial statements is the adjusted balance of the two. So I have put here easy level. So these are just easy reconciling items, 1 to 14, if you can see that. Okay? So let's start with number 1. A check received from a customer worth 100,000 was received and recorded by the company on January 30, 2021. By the way, before we move on, these receipts and disbursements are actually based on the problem. These are January receipts and January disbursements, January 20x2. These are also January 20x2. So, you have to think always that whatever the amount here, the receipts and the disbursement should belong to January 20x2. It should not include receipts from December 20x1, and it should not include receipts and disbursements on February 20x2. Okay? That is what do we call in auditing proper cut-off. You record based on the appropriate period. That's proper cut-off. Okay? Now, so meaning this beginning balances pertains to December 31, 20x1. December 31, 20x1. I guess we need some space. So much space. But regardless, let's take a look at number 1. The check received from a customer worth 100,000 was received and recorded by the company on January 30, 20X1. Such check was not yet recorded by the bank of BBG. So, first step, how did they record it? Second step, who is correct? Third step, reconcile. That's it. Okay? So, first, um, check received from a customer worth 100,000. So, if there is a check received, basically what they did in the company is they put that under receipts. So that is common sense, right? And if ever there are receipts, it will increase the ending balance. That's the company did. Because again, check received from a customer worth 100,000 was received and recorded by the company on January 30, 20X1. So that's what happened. So what did the bank do? It said here, such check was not yet recorded by the bank of BBG. So there's none. There's no entry at all. So that's step 1. Step 2, which of the two is correct? So as you can see, the books is correct. Because whenever we receive some collections, the moment we receive the collections, we have to record it. Okay? Of course, we could not say that absolutely the bank is wrong. The bank is just wrong in the timing because the bank is doing its job. It just records whenever there are deposits in which it was not yet deposited. So they are also correct in their job. But on the timing, they are wrong. So when do we record this 100,000? Of course, at the moment of the collection. So of course, this will really happen if that's the case. Because again, the bank did not record this. So how do we reconcile it? We reconcile it by adding 100,000 here and 100,000 here. So that's number 1. Let's put number 1 so that we will be guided. Okay? So that's it. But I'm still thinking that this is really, let's give space a bit. Okay? As long as you know that this is the books. So, will we do some entries for the books? No. Because the books is already correct on number 1. It's like that. The reconciliation is just like that. There are only 3 steps. Let's go to number 2. Cash collections on hand from customers is 75,000, which were still undeposited in the bank. So, on the number 2, if you are going to imagine, this is very much the same. There are receipts that were recorded in the books. Of course, it will have a positive effect on the ending balance also. But the bank did not do anything. Okay? So, second step, who is correct? Of course, the books is again correct. Because you record receipts when they are collected. And unfortunately, they were collected during the month. So, we have 75,000. You have to add it here. So that hopefully, the books and the bank will be reconciled. Okay? So that is the entry for deposit in transit. Actually, these are deposits in transit. These are the collections that were already recorded in the books, but the bank did not taken up it yet. Okay? Because it's still undeposited. Okay? So that's deposit in transit. And as you can see, the bank is always adjusted for deposit in transit because it's the ones that has not yet recorded it. The books will not be changed already because the books has already recorded them. Okay? So again, that's deposit in transit. Add in the receipts and add on the ending of the bank. Okay? Now let's go to number 3. Payments from customers BBK and BBL worth 35,000 and 40,000 respectively, are credited in the bank in January 31, 20X2. Such amounts were only reflected by BBG company in February 20X2. Maybe these customers, BBK and BBL, transferred their payments immediately to the bank. So the bank recorded it as 35 plus 40, that's 75. They recorded it, of course, they have added it on the ending balance. Okay? So, the company, during January, again, we're talking about January, they did not know about this. The books, they did not know about this. They only, such amounts, they have only reflected it, according to the problem, on February 20X2, on the next month. So, that means the 75,000 were not taken up by the books. Okay? So, what will we do? Who is the correct one? In this case, the bank is the correct one. Again, you record the collections or the receipts the moment that you have collected it. And unfortunately, the bank collected it in January. So that means we have to put here, this is actually number 2. The number 3 here, the reconciling item. We have to recognize that 75,000 as receipts. And of course, there will be an addition on the ending balance because whenever there are receipts, the ending balance will go up also. Okay? So that's for number 3. And since we are in this part, this is what do we call as credit memos. When the bank recognizes first any collections without the books taking it up yet, those are considered as credit memos. And credit memos are usually adjustments to the books because they have not recognized that the bank recognized it. And on the bank, there are no entries at all. Is that 75,000 also? Yeah, 75,000 also. That's a coincidence. Okay, 30 and 35, 75. Okay. Now, let's go to number 4. Still, on January 20X2, the bank also credited 2.3 million to the account of BBG as loan proceeds for the loan applied by BBG. This was not taken into account in the company's books. So on January 20X2, this happened. The bank credited 2.3. So there is an addition here of 2.3. Let's dig deeper on this. Normally, if BBG, the company, is applying for a loan on the same bank in which it has also a bank account, the bank will credit it to the account immediately. And sometimes, the company is not notified. Okay? So that's what happened here. So, BBJ availed for a loan, and because of that, the 2.3 million has been given by the bank by crediting it immediately on the bank account of BBJ. So 2.3 and 2.3, there are no entries in the books. Of course, that is still a credit memo. And if it is a credit memo, again, what will be adjusted is the books because it's the ones that did not record this. You add the 2.3, you add the 2.3, the same with what the bank did. Okay, so that they will be reconciled. Okay? So we're getting a hang of it. Okay? Let's continue. Let's have number 5. The bank also credited interest income of 500. This is an income of the checking account in the month of January 20X2. So the bank added 500 here. This is also a credit memo. So, if you're going to open in a bank, sometimes there are some accounts that earns interest, and based on this problem, this account might be one of those. Okay? So, this happened. There is an interest income. Although this is very immaterial, but it will be added by the bank to your account balance. Okay? Of course, these types of credit memos, you will only know this after the month. Like, If it is January here in our problem, you will know this on February only. Because on February, that is the time that the bank will release a bank statement as well as the checks that you have used and which were encashed by the suppliers. So imagine, you're gonna receive January, the January bank statement on the next month, the February. Okay? And then enclosed there are the checks that you have issued to your payees. Okay? And then um, the checks that are paid by the bank only. Those checks that you have issued and were not returned to you on February are considered as outstanding. Okay? So, that's it. Again, normally these types of credit memos and debit memos, if ever, are usually found out by the company after the bank statement was given after the month. Okay? So, not usually during the month. Okay? So, if this is a credit memo, still, what will be adjusted is the books. You have 500, you have to add 500 also here. So that's number 5. Now let's go to number 6. BBG has written checks 112 and 113 for 1 million each. So since we are BBG in this case, we have written 2 million checks. 1,112, 1,113 last January 25, 20x2. But when the bank statement was given with the canceled checks, those actually, the paid checks by the bank, those are considered as canceled checks. So in this particular story, on January 25, we have written checks 112 and 113 for 2 million and we have given it to the payees. Okay? Now, on February, for example, the bank statement was given by the bank as well as the checks that they have paid. This 112 and 113 is missing. So which means this is still outstanding and has not yet been encashed by the payees that you have given the checks to. Okay? So if that is the case, what did the company do with this particular reconciling item? They have recognized already it as a disbursement. So addition, okay? Disbursement, but you put their addition. Of course, you cannot put here negative disbursement because if you put negative disbursement, then that means that's already a positive thing. Okay? Because it's as if a negative disbursement is as if a saving. So you have to put here positive disbursement, but the effect of the disbursement, if it is positive here, the ending will suffer. So that's what the books did for these checks. Okay? Question, what happened with the bank? Did they record it? Of course not. Because the checks 112 and 113, it's not yet paid by the bank. They are considered as outstanding checks. So that's what happened. Question, who is the ones correct? Is the books correct? Or the company correct? Or the bank? Of course, the correct one is the books. So, you have to recognize 2 million as disbursement here. And you have to deduct. Because that might be the biggest reason why is it. This is still 3582. Here, it's already negative 336525 because the books has already taken up the disbursement of 2 million and it was already deducted on the cash in bank balance, but the bank did not yet do that. Okay? So this is number 6. Yeah, and let's put here number 6. Now let's go to number 7. The bank recorded in the debits an NSF or DAIF check worth 120,500 check received from a customer last December 24, 20x1. So the question is, what is this? If we talk about no sufficient funds check or drawn against insufficient funds check, the customer paid us here 120,500 in check form. Okay? However, it has been found by the bank that actually the customer has a zero balance on its account. Okay? So that means the check is worthless. No sufficient funds check or drawn against insufficient funds. Okay? So what will happen to this one? Normally, when a customer pays a check, we recognize it as cash immediately. Normally, the company will put it as receipts and it will result to addition to the ending balance. And of course, if you try to deposit it, it will become recorded by the banks also at the receipts or credits, and it will add also on your bank account. Okay? However, such check is still under investigation. After investigation by the bank, and it was found out that that is really no sufficient funds check, what will happen is that since the bank cannot erase it as a receipt, they will put it in the disbursements. Okay? They will put it in the disbursements and it will be deducted on your ending balance rather than erasing it in the receipts. So to illustrate, it's as if like this. You receive a check from a customer. Of course, you will put that here, 120,500 as a receipt and then 120,500 in the books. This one as if is the one's recording. Now, when you deposit it, the bank also put it in the receipts. And then they investigate. After investigating, and they found out that the check is worthless or no sufficient funds, they put it here, 120,500. And then they deduct 120,500. So on the ending balance, it's as if this did not happen because it was cancelled out. Okay? However, they did not cancel the receipts because they cannot cancel this. They cannot erase that one, as I mentioned and emphasized a while ago. Alright? Now, normally, the no sufficient funds check, you will see this on the next month only. So meaning, you have recorded this, the bank also recorded that, you did not record about this. NSF checks or drawn against insufficient funds are considered also as debit memos. That means they have been deducted and recorded by the bank first before you, before the company. Okay? So the question is, who is the ones correct? Of course, we're gonna choose the bank. So you're not going to do anything with the bank as a reconciler. You have to do something with the books. As a debit memo, you have to record it as 120,500 disbursements and you have to minus 120,500 here. The same with what the bank did. Okay? Because again, the correct ones is the bank as to the timing only. Okay? Of course, you cannot say that this is doing anything wrong because he did not know, or the person that is in charge with the books did not know about it. But still, you need to reconcile because as to timing, the bank is correct. Okay? So that's number 7. Again, NSF checks are usually customers pay you a check. You record it as receipts and you increase the ending balance of your cash and bank. And when you deposit it, the bank will also increase the receipts and the ending balance of your account. However, after investigation, if it is found that the check is worthless, they're going to put disbursements and deduct your account. Okay? And normally, these NSF checks or DAIF checks, the company don't know anything about it. So you have to record it as a reconciling item. Just like this. Okay? Now next. The bank also debited service charges of 675 for the month of January 20X2. So, what did the company do? None. What the bank did is 675 here, and then they deducted 675. Okay? So that's what they did. Of course, the books did not do anything because the ones that will know first about service charges is the bank. Okay? So, when you are the reconciler, you have to put on the number 7, you put it as a disbursement. What is that? Number 8. Ay, what is number 7? What's number 6? What is number 6? This should have been number 7, the 12500, and this should have been number 8. And you should put here 675 as the disbursement, and hopefully when you deduct it, mirroring what the bank did, supposedly in the end they should be reconciled. Okay? Now, let's go to number 9. The bank also debited income tax from the income mentioned in number 5. If you remember number 5, we have an interest income of 500 because of the checking account. Normally, there are taxes charged for that income. And that tax in this illustrative problem is 50 pesos. So that means you have 50 here. The bank did this and you did not know anything about it. That is still a debit memo. So what are you gonna do? You just have to put 50 also here, the same with what the bank did originally. And hopefully they will be reconciled. Okay? So that's number 9. Number 10. The bank also debited 150,000 from your account, 145,000 as repayment of the loan, and interest expense of 5,000. So all in all, 150. So this is related to the loan mentioned in number 4. So that means you paid. During the month, you've taken a loan and then you paid immediately as if. But the bank actually taken it out from your bank account immediately without the company knowing based on this illustrative problem. So what they did, they put on the debits 150,000 and then they deducted 150,000 from your account. And the company accountant or bookkeeper did not know anything about it. Is this really impossible? Of course. Sometimes there are some expenses of the company that are uh, automatically deducted by the bank without you knowing it yet. Like for example, utilities. If you have an arrangement with the bank that whenever there are utilities like electric bills and water bills, they're going to pay it immediately. They're going to deduct it immediately. And that is a debit memo because debit memos are those deductions by the bank which the company did not take up yet. Okay? So in this case, we have 150,000, 150,000. The accountant or the bookkeeper did not know anything about it. Again, that is still a debit memo. So you have number 10 here. You have to put 150,000 as a disbursement. And then, if there are disbursements, of course, your ending balance will be deducted also. So that's number 10. Now let's go to number 11. The bank credited 37,000 to BBG's account erroneously. Now, when it comes to errors, if the bank made an error, of course, that will not be reflected in the books. The ones that you will correct is the bank. So, who committed the error? A while ago, from 1 to 10, we have been talking about timing differences only. Okay? The bank recorded it first or the book recorded it first. That's why you reconcile. Okay? But when we talk about errors, who is the party which is in error? That is the ones that you are going to adjust only. So number 11, the bank credited 37,000 on BBG's account. So basically, really, we need some space. but you have to follow. It's just 37,000 here, and there is a 37,000 addition to your account based on the book records, which is in error. Okay? The amount should have been credited to BBM. This was collected by the bank on February 20x2. Normally, the errors that were committed by the bank also, just like this one, they're going to record it, or they're going to collect it on the next month. So since there is a wrong credit, they're going to debit that on February. So that is a problem of you on February. Okay? But this time, this is not right. And since this is your record as a reconciler, you just have to deduct the receipts. We have number 10. You have number 10. You have to deduct the receipts by 37,000, and you have to adjust the bank because that is a bank error, and you have to deduct also 37,000 here. That's it. That's number 10. Okay? Sir, why are you deducting on the receipts? As a reconciler, you could actually erase. You could deduct. Unlike here, in the bank, as I have mentioned, the person or the records in the bank could not be erased. Again, how do the bank corrects their errors? If there is a wrong credit, they're going to debit that in order to correct it. And in this case, they're going to collect it in February pa. So that means they are going to debit that on your account in February. And that is another problem of yours when you reconcile in February. But this time, we are still on January. Okay? So that's number 10. Let's go to number 11. The bank also erroneously debited 43,000 for a check issued by BBMO. This was collected by the bank in the next month. So, another error committed is like this. You have 43,000. They put it in your account as disbursement, and your account has been deducted by 43,000. But that check is not yours. Okay? So, in order to correct it, books don't have anything to do with that error. So, number 11, what you're gonna do, you have to erase that 43,000 on the disbursements because it's not your disbursement. And then, you have to add 43,000. Of course, that is already logical. When you deduct your disbursement, that means your ending balance will have a positive effect. Okay? Because when this becomes lower, this becomes bigger. Okay? That's it. This is very much opposite to this one. Because you added disbursements, of course, the effect of that on your ending balance is a deduction also. I hope that's clear. So you can repeat this video. You can repeat this video multiple of times in order to get it. Okay? So, let's have number 13 before we take a break. No, 13 and 14. We have the next level later on. But we're gonna talk about that later. So, number 13. BBG has written a check number 114 for a correct amount of 100,000 but recorded it in the books as only 10,000. This was taken up by the bank correctly. So that means on January 20x2, BBG put only a disbursement of 10,000. So what was deducted in the ending balance is only 10,000. Right? Now, as to the bank, they have recorded it perfectly. We have 100,000 as disbursement, and what was deducted in your account, it's 100,000 because it said here that this was taken up by the bank correctly. So, which is wrong? Of course, the books again will be the wrong. So, what will we do? We have to add the disbursement by how much? 90,000. And we have to deduct 90,000 from the account because we only deducted 10 and the correct amount is 100. So the adjusting entry is 90. You deduct 90 and it's okay already. You have 10 plus 90, it's already 100. Okay? So that's number 13. How about number 14? Collections from customer.g, okay, deposited by BBG in the bank for 50,000. Okay. BBG erroneously recorded 5,000 in the books of the company. So what did the... since it was deposited in the bank already, so that means the bank recorded it correctly at 50,000 and then added here at 50,000. How about the books? It only recorded 5,000, something like that. So, who is the wrong one? Of course, the books is the wrong one. It's the one that should be adjusted. So, this is already number 14. Why did I put number 10 here on the 90,000? This is supposed to be 13. Okay? So, we have number 14. So, what will we do? Of course, we have to add 45,000 because we only added 5,000 on the receipt. So, plus 45, it's already 50. And we have to add our account by 50,000. That's it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I don't know where is the 11. 37,000. This should be 11. And then the 10 is 150,000. This should be 10. Um, no. This should be plus 45. It's very difficult if you are alone. No one can recognize your mistakes. So let's check. Number 1 is about the 100,000. Number 2 is the 75,000. Number 3 is also 75,000. Number 4, it's the 2.3 million. Number 5 is all about the interest income, 500. Number 6, we have 2 million. Where is number 6? Yeah, number 6 is 2 million. Number 7, 120,500. Number 8, 675. So this is number 8. Number 9, we have the 50. Number 10 is 150. Let's put it right here. Number 10. And then number 11, 37,500. Right? Number 12, 43,000. This is number 12. Number 13, you have 10,000. 90,000. This is number 13. Number 14, what was recorded is 50,000 supposedly. The books only recorded 5,000, so we have 45,000 addition. So that is number 14. So that's it for the easy level when it comes to reconciling. You can take note of this because I'm going to erase actually all of it for the level 2. And basically, I am going to flash at the end of this video the adjusted solution. It already talks about the reconciliation of the level 1 and the level 2 later on. Okay? But I'll give you time. You have to pause this video first. You have to copy if ever you wanted to because I'm going to erase it later on. Okay? So that's it for this part. See you later. So, hello guys. Let's continue. So, our illustrative problem is really very long. So I would have to erase this. But later on, I have um, made, what do you call this? This one for the overall illustration. So this is partial only. We're gonna add that for level 2. And I'm going to present the complete one to you so that you'll be able to see the arranged one, the arranged reconciliation. Okay? But for now, let's continue for the level 2. Okay? So, still you are the reconciler and there is someone that is assigned to record your deposits and disbursements in the bank, and there is also a bookkeeper or an accountant that which was assigned to record for the BBJ company. You are again the reconciler. So let's erase it first. So I would like you to focus again on the right side. I'm going to post here the picture of the level 2 reconciling statements, which will help us reconcile the records of the bank as well as the records of the company. So we have number 15. Since I cannot see what's in there, number 15 is actually check number 105 with an amount of 25,000 was received and recorded from a customer last December 20x1. Again, these receipts and disbursements as well as the ending pertains to January 2000x2 or 20x2. So the meaning of this is just, let me erase this also. The meaning of this is just, there is in the past month, in December 20x1, there is a check in the amount of 25,000 from a customer. That was recorded on December 30, 20x1 in the books. So it's as if in your mind, it's like this. If this is January, this is December. On the beginning balance, this is December 31. So there is an addition here of 25,000. And that was recorded in the books of the company. So basically, it's like that. So what's the relationship of that two? As far as you have seen a while ago, the reconciliation and the recording is always at least two, right? There are relationships to that. And I hope that it is very clear a while ago that whenever you put receipts, the ending balance will increase. Whenever you put positive disbursements, of course, the ending balance will be deducted. And whenever there is a deduction on the receipts, the ending balance will be deducted. That is logical. And whenever we deduct the disbursements, there is an addition to the ending balance. Because when you deduct disbursements, it's as if a savings on your part, right? When you, for example, if you have a lot of expenditure and that expenditure you have saved something, so that is an addition to your bank account. Okay? In here, you can also see in U1. Whenever there is an increase in the beginning balance, it will actually affect your ending balance and it is logical. So let me repeat that so that you will remember. In the recording of both the reconciler, the bank representative, as well as the accountant or bookkeeper, if you put receipts, of course, the ending balance will increase because receipts are collections. When you deduct receipts, of course, the effect is your ending balance will be deducted also. When you add disbursements, the ending balance will be deducted. But when you decrease the disbursements, it's as if a savings, then your ending balance will increase. And lastly, if you increase the beginning balance, of course, the ending balance will be affected also. That is very logical treatments, right? And if you decrease, of course, the beginning balance, the ending balance will also be affected. It will be decreased also. Okay? So in this case, in number 15, there is a 25,000 check received and recorded from a customer last December 20 X1, which is why we put it right here. We do not mess with the receipts and the disbursements of the company because again, these are for January receipts and January disbursements. So since we're talking about December, it's here. We mess with the beginning balance. Okay? So that's what happened. And it said here, such check was only deposited on January 20x2. So what did the bank do last December? None. Because in here, the check was only deposited in January 20x2. Okay? So what did the bank do on December? None. But it did recognize the 25,000 here in the receipts in January. Okay? That's what it did. And then, the ending balance will be affected. It will be added. So as you can see, there is no problem with the result on the ending balance. Both of them has positive 25,000. The only difference that they have is the timing. The company recorded it last month, December. The bank only recorded it in January. Okay? It's only a timing difference. However, because of that, these two balances in the bank and in the books, it will not be reconciled. So, step 1, that's what they did. Step 2, who is in the right timing? So, the ones that are in the right timing is, of course, the books. Okay? It's because you recognize receipts when you collected it, and BBG collected it on December. The only reason why it's like this in the bank because it was not deposited. Okay? So what will you do to reconcile? You have to follow the books because the books in this case are the ones that are correct. So that means you don't do anything in the books. The second one, you go to the bank and of course there is no problem again on the ending because they are the same. But on the books, it said that you have to add here 25,000, so you have to follow. And you don't have to put anything on the receipts. But then again, the bank put 25,000 on January, which is again, we are considering books as in the right timing. So this is wrong. Okay? So what will you do in order for this to be corrected? Since there is an addition of 25,000, we need to deduct from the receipts of the bank 25,000. So that will not happen because the positive 25,000 will now be collected. You put in negative, you are going to follow already what is in the books. Okay? And aside from which, because of adding this, you have followed the books also. So normally, that's what will happen if we talk about deposit in transit beginning. So what is deposit in transit beginning? So if we are in January 1 or December 31 is the beginning of the month. Okay? So what are those deposits that were not recorded as of December 31 or January 1 as of the very beginning? That's deposit in transit, which is this particular problem in number 15. So whenever there are deposits in transit, this is always the adjusting entry. You have to add the bank at the very beginning and you have to deduct the receipts because basically the bank has recognized that as receipts for today. Okay? When supposedly those receipts should have been recognized in the past period. Okay? So that's it. Okay? So there is always step 3. Three steps. I'm sorry. First is you need to analyze what they did. Second, you have to decide on what is the correct entry, who is in the right, who is in the wrong. Basically, what is the correct entry, and then you adjust. Okay, based on your correct entry. Okay? Now let's go to number 16. Check 106 with an amount of 13,000 was recorded and received from customer Z last December 31. So meaning it's still in the beginning. Because again, this receipts, disbursements are for the current period, January 20x2. So there is a 13,000 that was recorded and received from customer Z last December 31, 20x1. Such check remained undeposited even at January 31, 20x2. It was also found that the correct amount of the check upon review is 130,000. Okay. Okay. So, what happened? First off, this was recorded by the books at 13,000. Even if the correct amount is 130,000. Okay? So, 13,000 and then 13,000. Why was it not recorded by the company in the receipts and disbursements in here? Because again, that is for January 20x2. Maybe the company only recorded the receipts and disbursements for January 20x2. Okay? And it's very clear in the problem that the company recorded it last December 31, 20x1. So we don't need to mess with these two columns. We mess with the beginning. Okay? So that's what happened. Although that is wrong. It should have been 130. But they are partially correct. The books is partially correct for 13,000 only. Now, what did the bank do? Actually, the bank did not do anything. Why? Because as you can see here, the check remained undeposited. So if it is not deposited, the bank will not know anything about it. Okay? So the bank has no entry at all. Okay? Now, step 2. Since you have already have step 1, what did they do? Decide on what is the correct one. The correct one should have been, this is plus 130,000 and then plus 130,000. This is the correct, this is the wrong one. Correct? So if that is the case, you have to correct both of them. Like for example, when we go to the bank records, what will you do? You have to add on the beginning 130,000. Instead of doing nothing, you have to add the ending also at 130. That's it. Sir, why is it different from number 15? Of course, on the number 15, it was said there that the check was deposited in January 20x2. That means the bank has recognized that 25,000 during January. Which is why it has a different adjusting entry. You have to deduct it from the receipts of the bank. Whereas on the number 16, clearly, this 130,000 check was not deposited even at January 31, 20x2. That means the bank has no knowledge about it in January. So there are no entries at all. Okay? So that is the difference of these entries. Okay? And I would like to let you realize that whenever we talk about bank reconciliation, this is really an easy topic, but in tests, it becomes difficult because the easiness, what do you call this? Since the topic is so easy, the creators of the problem will have a lot of imaginations on the reconciling items. So I put here 27 reconciling statements for you to review, but I am not confident that this already covers everything, every possible scenario. But still, 27 is already good so that you will have an example of how to reconcile. Okay? So you have number 16. That's it for the bank. However, if you remembered, the books are only partially correct. They only recorded 13,000. So we have to recognize more. So 130,000 minus 13,000, that means we need to add at the very beginning on the number 16, we have to add 117,000 to follow the correct one. And then we have to add also 117,000 in the end. Okay? So both of them are wrong. Okay? So which is why we are already at level 2. Because these reconciliations here are a little bit on the higher level. Okay? Let's have number 17. A credit memo by the bank uh, from electronic transfer made by a customer, so meaning the customer paid directly to the bank for 90,000 last December 20x1, has been taken up by the company's books on January 20x2 only. So the this particular reconciling item is the reverse of the reconciling item that we did on number 15, in which the bank recognized this at first. The bank recognized this first before the company. So they did this 90,000 and they added 90,000 on your bank balance. Okay? On December, which is why we put it right here. Okay? Now, what did the company do? This was taken up by the company's books on January 20x2. So that means it was put right here under the January receipts. And although the effect is still the same with what the bank did, although the bank recognized it in the past period. So that's it. You have to have the step 2, which is the ones that's correct. On timing, the correct one is the bank, because the bank collected it actually on December. So what will you do? So since the bank is correct, you don't need to do anything in the bank as a reconciler. What will you do? You just have to follow what was made by the bank, which is they added 90,000 in the beginning balance. You're gonna do that also. So we are at number 17. We have to do that 90,000 addition so that they will be reconciled. Our purpose here is to be reconciled. Okay? Now, aside from which, as you can see, the bank did not do anything on the receipts and disbursements in January. But here in the books, the company in charge, accountant or bookkeeper, put it in the receipts in January. So what will you do? You have to deduct that one so that this will be cancelled out and this will become the same with what the bank did. Okay? And eventually, we're hoping that they will be reconciled later on. Okay? So this is also the treatment or the adjustment as a reconciler if we're talking about credit memos in the past period. So remember, this is a credit memo received by the bank in December. Okay? So this is always the pattern of credit memos in the past. So what will you adjust? The books. Because credit memos, that means they have been recognized already by the bank last period. So you have to recognize that also as the books so that you will be reconciled. And of course, credit memos in the past usually are recorded by the books in the current period, which is wrong. Okay? So what will you do to correct that mistake? You have to deduct the receipts because normally it will be put on the receipts by the books. Wow. Again, credit memos are those that are recognized by the bank in the past period, not recognized by the company in the past period, but recognized by the company in the current period, which is wrong. Okay? So you have to deduct that. Okay? So it's basically an opposite of deposit in transit. They are the same entries, but in different books. And if deposit in transit, we have to adjust the bank. If credit memos, we have to adjust the books. Okay? Next, let's go to number 18. Interest income of 750 on December 31, 20X1 was credited by the bank. The company's books recorded it during January 20X2 as part of the receipts. So this has been very clear. That means on December 31, 20X1, this happened in the bank. They recorded it. And as to the books, it was recorded on January, meaning they put it in the receipts, the bookkeeper or the accountant of the company. That's what they did. You have to decide which is the ones correct. So as to timing, the correct ones is the bank because the interest income was actually earned on December. So we have to follow the bank. So no adjustment to the bank. We have to adjust the books. What will we do? We have to add the 750 and we have to deduct it from the receipts because again it was added by the bookkeeper on the receipts. It's very clear here on number 18. And then we are hoping that because of this, the books and the bank records will be reconciled later on. Okay? So that's number 18. As to number 19, a check collected from a customer with an amount of 33,000, was collected and deposited in January 20X1. So, in the current period. So, it was collected and deposited. That means it was recognized by the books and recognized by the bank also. During the same month, it was found that the check is considered NSF or DAIF. It was debited immediately by the bank while the company bookkeeper recorded it as a reduction of receipts or collections. So let's first start start with the collection before it was found out to be no sufficient funds check. So this happened, 33,000 and then 33,000 addition. And then when it was deposited, you have 33,000 here. We have we have 33,000 also here. That's what the bank did. However, it was found out as NSF. So what did the bank did according to here? It was debited immediately by the bank. So if this is credits, this is debit. So this happened. So this was cancelled. In the ending balance, the positive 33 has been negated by the 33,000. However, there is a receipt, there is a disbursement. Again, that is usually the style of the bank because they could not erase. So if they erroneously put a credit, they're going to debit it later on. Okay? But what did the company do? According to here on the number 19, it was debited immediately by the bank. This one. While the bookkeeper, the company bookkeeper, recorded it as a reduction of receipts. What they did is this one. That one. Okay? So, as you can see, there is an addition of 33,000. It was negated, so it's as if it became zero. How about here? The receipts is plus 33 and the disbursements is plus 33. Of course, they will not reconcile because they have different treatments. Okay? So that's what happened. That's step one. What did they do? That's what they did. Okay? Second, who is the correct one? In my case, based on my experience in making bank reconciliation in school as well as in the actual practice, I usually um, treat the bank as the correct one. So the receipts 33 and then 33. So that means in order to reconcile, we have to follow what the bank did. So as you can see, the books, the receipts, 33 at the very beginning positive, minus 33 became 0. So it will not reconcile. So on the number 19, my reconciling item here is actually to follow the bank. So I don't need to reconcile the balances on the ending because they are the same. They are not the same in the receipts and the disbursements. So I have to add here 33,000 and 33,000 so that they will reconcile. Okay? So the zero of the receipts here in the company's books and the disbursements will now become positive 33, positive 33. The same with the bank treatment. Okay? So that's it for number 19. And then we have number 20. A service charge of 345 in the month of December. This is supposed to be 20x1. This is not 20x5, okay? So this is 20x1. Was only taken up in the company's books in January 10, 20x2. So what happened? Of course, as to the bank, it was taken on December 20x1. So you have 345 here. Deduction. Because service charges are deducted from your account. So the bank deducted it on December. Of course, the ending balance will also be affected. It will be deducted also. Okay? Now, what did the company do? According to here, since it was taken on the company's books in January 10, 20x2, it was recorded as a disbursement here. And it's also a deduction here. So the same deduction in the ending balance, but the recognition is not the same. The timing. The bank recognized it at December. The books recorded it during January 20x2, which is why it's like that. The question is, step 2, who is the correct one? The correct one is the bank, because the service charge is actually an expense incurred in December. So we have to follow the bank. So since the bank is correct, you don't need to make any entry. We have to make an entry here in the books, which is we have to follow what the bank did. You deduct the 345 at the beginning balance. Don't put it in the disbursement in January, because again, that is not a disbursement in January. So we have to deduct 345 in the disbursement so that this will be erased. Okay? So that's it. That's the story for any debit memo in the past. This is the adjustment. The books will be adjusted. It should be deducted from the beginning balance because this is a debit memo in the past period. And you have to deduct it from the disbursement during the current period. Because we are assuming, this is an assumption, okay, that you have to follow always. Any debit memos or deductions by the bank in the past, which were not taken up by the company in the past, it will be taken up in the next period. Okay? So, it's as if this 345 has been taken up now in January. So, you have to deduct it because this is not an expense incurred in January. It is in December. Okay? Let's go to number 21. A check received from a customer T to G with an amount of 24,000 has been dated February 28, 20x2. So what is the meaning of this? If you receive a check just like this is considered as post-dated checks. And these are not cash immediately now. It will only be cash when the February 28, 20x2 arrives. Okay? So what happened to this? You have received this check from T to G. The date is February 28, 20x2. Again, this is not considered as cash yet. So such check was recorded already in the company's books at January 25, 20x2. So meaning, the company already put this as 24,000 on the receipts, and it was also added on the cash in bank balance ending. That's what happened. And then, it was deposited also in the bank. But the bank did not yet reflect such deposit as of January 31, 20x2. So this 24,000 was received by the bank, but it was not put by the bank yet on January, because again, this is a post-dated check, and it will just become a cash upon the arrival of the date that was mentioned on the check. Okay? So, there is no entry on the bank. There is an entry on the books. Question, step 2. Who is the correct one? The correct one is the bank. Okay? Because this is again a post-dated check. So, since the bank is correct, we have to adjust the book. We have to deduct that 24,000 from receipts. And we have to deduct that one in the ending balance of your cash in bank. That's it. That's for number 21. Because they are not yet considered as cash for the moment. Let's go to number 22. Number 22 is an interest expense of 3,000 from a previous loan was directly deducted by the bank from BBG's account last December 20x1. So meaning, this happened. Minus 3,000. The bank did this automatically. Okay? That's what the bank did on December 20x1. Now, such debit memo was taken up in the company's books at January 20x2. So, if the bank recognized it last December, the books did not. It only recognized it on January 20x2. So, what happened is like this, 3,000. They put it on the disbursements and then minus 3,000. It's fine. They're the same with the effects on the ending balances. However, this is their discrepancy. Okay? It was deducted by the bank on the last period. It was put as disbursements by the company during the current period. Who is the correct one? The answer is the bank. The bank is the correct one. So you should follow the bank. So we are to adjust the book records. Wherein, we have to deduct 3,000 here. And since, according to here, the books recorded the 3,000 as disbursement on January, that is wrong. So you have to deduct that also from the disbursements. If that is the case, then the bank was already followed. You have negative 3,000, negative 3,000 here. You have positive 3,000 on the disbursements, whereas in the bank, there should be no entry. So you have deducted it. They are reconciled already in this issue, in number 22. Okay? Let's go to number 23. BBG wrote a check for 22,500 last December 20x1. So basically, this is what happened. Minus 22,500. Because when you write a check, that is a deduction already of your account balance. And BBG wrote a check last December 20x1. So we are not going to mess with the receipts, disbursements, and ending here. We have to mess with the beginning balance because the writing of the check of 22,500 happened last month, December 20x1. It was found out that such check has not yet been encashed. So meaning, this is the effect of of the recording of the books. So, it was found out that the check has not yet been encashed as of January 31, 20x2. Okay. So, meaning if it has not yet been encashed, BBG wrote a check to a payee. The payee did not encash it yet. The bank has no idea about that expenditure. So, there is no entry on the bank. And it was also found out that the check was incorrectly recorded in the books as 25,200. So, this is actually the entry. 25,200. 25,200. So there is transposition error in the recording. 25,200 instead of 22,500. Okay, so those are the entries. The bank has no idea about it, and then the books recorded it at a wrong amount, 25,200. What is the correct one? The correct one is 22,500 supposedly, and then this one should be 22,500. That is the correct one instead of this. So, who is the wrong one? So, the wrong one, the major party that is wrong is the bank, because this should have been recorded at the correct amount, of course, 22,500. So what will we do? This is the correct, right? So meaning the bank will be adjusted. We have to put here 22,500. We have to deduct this 22,500. Again, the bank is not actually wrong in its doing of duties. On the timing only. Okay? When was it written? It's in December. So it should have been recorded as a disbursement on December. But the bank did not do that on December, did not do that also in January because it was not yet in cash. These are outstanding checks. Okay? Specifically, these are outstanding checks beginning or outstanding checks at the end of the previous period. Okay? So you have to deduct 22,500 here. And since the bank did not have any entries on the receipts and disbursements, they are correct. There should be no entries on the receipts and disbursements for January 20x2 because this is for it is a disbursement last month or December 20x1. So this is already the adjusting entry for the bank. Supposedly, the books will not be adjusted anymore because normally when we talk about outstanding checks, those are recorded first by the company, okay, correctly in the correct timing. However, we have an error in the amount, okay? So we have to adjust the amount. So what was recognized is 25,200 minus 22,500, which is the correct one. So meaning, we have deducted more than what should be deducted. So, what we're gonna do, on number 23 also, you have to add back the 27. So, from negative 25,200, it will now become 22,500 if we add 27. And we add also on the ending balance 27. That's it. Okay? Now, let's talk about number 24. The Bank of BBG erroneously deducted 20,000 from BBG's account last December 20x1. So meaning, this is what they did. Can I erase? Maybe I should erase. What they did in number 24 is that the Bank of BBG erroneously deducted 20,000 from BBG's account. So meaning, they have deducted 20,000. Of course, if they deducted the beginning balance, the ending balance will also be affected. That's what they did, erroneously. Okay? The bank corrected it in January 20x2. So, since they deducted it, and since they corrected it, so if we talk about deductions, that's debit. Okay? Okay? They have recorded it as a debit. So, in order to correct it, what they did is this one. They put 20,000 on the receipts on January. Because again, their error is recording disbursements, if I'm correct. Erroneously deducted. Okay. So that means they put it in the disbursements last December. The effect is this one. Okay? So what they did in order to correct it, in January, they put receipts, 20,000. And then, they put it Of course, if you put receipts, the ending balance will be added also. So in effect, the effect is 0. Okay? And then the books did not make anything because that is an error of the bank. So what will happen? We don't have any problem with the ending because it has been zeroed out because of their correction. We have a problem with this one. Okay? We have to correct that because supposedly there should be 0 entries. Okay? 0 entries. So in order to correct that, we have number 24. We have to add back the 20,000 in the beginning balance because the bank erroneously decreased our account by 20,000. So add back 20,000 and then on the receipts, you have to deduct it. Okay? So that this two will be reconciled because if we leave it like this, there is no entry in the books, that will not really reconcile. Okay? So the negative there, you put positive, it will become 0. Just like in the books, there's 0 entries. As to the receipts, you have positive 20 here. The books has 0, but since you have deducted in the reconciliation, and that means that positive 20 is also zeroed out. And hopefully, they will reconcile in the end. Okay? So that's number 24. I'm sorry, I'm so sweaty. Let's have number 25. The bank also erroneously deducted 1,450 from BBG's account last December 20x1. Another deduction was made on number 25. They deducted 1,450. Of course, the effect is there is a deduction also on the ending balance. Okay? That's what happened. And it was found out that the error was only corrected at February 14, 20x2. So, unlike the number 23, there is no entry like this because this 1,450 was not yet corrected. It was corrected in the next month. So that is your problem as a reconciler on the next month. But for now, on January, these are the entries. Minus 1,450, minus 1,450. Nothing more, nothing less. But then again, the correct one is should be there's no entry at all because this is an error. Okay? So what will we do? On the number 25, you just have to add back what was deducted by the bank and also add that one in the ending balance. That's it. Okay? Number 26. An erroneous credit, this one is a credit na naman. So, an erroneous credit of 11.5 was made by the bank last December 20x1. This happened. Plus 11.5. Okay? It was made by the bank, so plus 11.5. What happened next? It was made last December 20x1. Yeah. But it has been corrected by the bank in January 20x2. So meaning, this happened. They put it in the disbursement because again, if there is a wrong addition, a wrong or an error in credits, they will be debited by the bank in the next period or in the time that they corrected it. Okay? Because they could not erase. Okay? So since this is an addition, this is a receipt on December. It will become a disbursement when corrected. So this will happen. So there's no problem with this one because it's already been zeroed out. The problem is, supposedly, there is no entry like that. And if we're going to leave it like this, then, of course, the bank and the books will not be reconciled. So what will we do? So on the number 26, you have to erase or deduct the 11.5 which was added by the bank on December. And also, in the correction, by putting disbursements on January, we have to eliminate that because that is an error, not really a disbursement by our company in January. Okay? So we have to deduct that. And if we do that, the 11.5 positive will now be zeroed out. And then the disbursements, that positive 11,500 will be zeroed out. And hopefully they will reconcile later. Okay? And lastly, we have number 27. Another erroneous credit. Again, erroneous credit again. So what did the bank do? 54,000, an addition of 54,000 in the ending balance. That's what they did on December 20 X1. Yeah, it's on December 20 X1. No need to mess with the receipts and disbursements because that is for January 20 X2. This error was only corrected on March and we are still in January. So that means that is the only entry made by the bank. There is no such thing as this one and this one. There's no correction yet. Okay? So what will you do? So on the number 27, let's put number 27. You have to put negative 54,000 to zero out the positive 54,000 and minus on the ending also 54,000. And that's it. That is for number 27. Okay? So again, let me remind you, when making reconciliation, you are the reconciler and you have to treat the books has a representative which is making entries for the company, and on the bank there is an in charge also of maintaining your account. So you are separate from them. Okay? But you will anticipate what did they do so that you can reconcile. Okay? So there are 3 steps. The first one is you need to know what did they do. Okay? Second, you have to analyze what is the correct entry. What should be the entry. Okay? And the third is reconcile. Okay? So, since a while ago we have cut the video, I have made a formal reconciliation from 1 until 27, from the easy level until the level 2. And I'll show it here. Yeah, here. So, since I could not see it, I'll just take a look at here. But as you can see, we have the beginning balance of the receipts, the disbursements of the bank. And in the book also, there are receipts, disbursements, and ending balance. So we have totaled the beginning balance until we got the adjusted balance of 2,688,450. So similar with the books, we have 2,688,450 also. And the receipts is 5,293,000. And in the books also, the receipts is 5,293,000. And then the disbursements is 6,160,000. And 6,160,000 also, both in the bank and the book records, until we got the ending balance, the adjusted ending balance of 1,818,450 and 1,818,450 for both the book and the bank records. Okay? So this is actually the bank reconciliation. Now, what are the twists? Let's talk about the twists. First, if you notice, there are 4 columns. So you might be asked, what is the adjusted balance? Adjusted beginning balance. What is the adjusted receipts? What is the adjusted disbursements? And what is the adjusted ending balance? You could be asked about that. So that is already 4 possible questions. And if ever you are not given the unadjusted book records, for example, like this 2481345, 2954 250, 5772 120, in the upper portion, and negative 336525 is not given at all. So you could also be asked about that. So what will you do? You do what we did and make adjustments on the bank and the books for deposit in transit, outstanding checks, and etc. And then you work back. Because if you got already the adjusted balance for the bank records, because the 2652 and 4217500 and the ending balance of 3582500 has been given. If you have that, then you're gonna get the adjusted balance. You just copy that adjusted balance to the book records, and then you work back. So from 2688450, you can minus the 2700, you add the 3000, you add the 345, you deduct the 750, you deduct the 90,000, you deduct the 117,000, and you're gonna get the unadjusted balance of beginning balance of BBG company. It's just like that. Okay? Now, what are the other things that might be asked of you? So those are 8 possible questions already. You might be asked about the the entry, because again, in the books, we started with negative 336,525, and in the end we have an adjusted balance of 1818450. You cannot immediately adapt the 1818450 from negative 336,525. You need to make entries so that your financial statements, especially the statement of financial position, will still be balanced. So actually, in your book records, for example, this number 3, the 75,000 receipts and the ending balance 75,000, you need to make an entry for that. And actually, that 75,000, if we can still remember, this is all about the 2 customers who paid in the bank immediately without informing the company. Okay? So that is a credit memo. So normally, the entry, so that you could effect the 75,000, is just debit cash, 75,000, credit accounts receivable of who are those customers. I guess there are 2 customers. AR customer 1, AR customer 2. If I'm not mistaken, that's 30,000 and 45,000, I guess. So you cannot immediately, from negative 336,525, go immediately to 1818450 without making um, adjustments. Like for example, the number 4 here on the book records. So in the book records, you have receipts 2.3 million and the ending balance 2.3. What is the entry for that? So normally the entry for that is debit cash 2.3 and loans payable. Since there is no other information given, it's just a loan. So you have loans payable 2.3 million. So you have to make each addition or subtraction in the book records from negative 336,525 until it got to 1818450. You need to make each entry so that the financial statements will be balanced. Okay? You cannot go again from negative 300 to positive 1818 without any credits. Okay? Because here you have to add the cash. But why? What are the credits? Okay? So that could be asked of you, the entries. And also, you could be asked how much is the deposit in transit ending and deposit and outstanding checks ending. Normally, you'll be given in the books. Oh no, I'll erase this. So, the deposit in transit ending is actually deposit in transit beginning. Again, deposit in transit are those collections that were recognized by the company but were not still taken up by the bank or still undeposited. So you put the deposit in transit beginning. So in our problem now, that's 123120x1. You put it right here, for example, 500,000. And then you put the total collections during the month. By the company, okay? So meaning, you go to the books. So you get the collections during the month. For example, 5 million. So these are not the receipts of the books. If you remembered, we have books, receipts, disbursements, and ending. This is not the total receipts of the book. Because sometimes, the total receipts of the books includes other items which should not be considered. Example, if the bank collected in the past 300,000 and the company did not know about it in the past, so that is a credit memo. The bank collected something and the company did not know about it, that's a credit memo. Now, that's a credit memo in the past. Now, since it's already on the next period, January 20x2, if you did know already about that 300,000, you will put it in the receipts for this current period. So meaning, if you wanted to get the collections during the month, you eliminate those credit memos that you have only recognized now when supposedly you have recognized that in the past. Okay, so again, this is not the total receipts. You do not copy the receipts of the books immediately here. You have to eliminate first the other items like the credit memos. Okay? Or any errors that you have committed. You just put here the collections during the month. So if we have the undeposited at the very beginning of the period plus the to be deposited, total amount to be deposited to the bank is 5.5 million. Okay? Less deposits. Deposits in the bank. Okay? So deposits in the bank should be receipts. But it's not the case. The deposits in the bank, you do not copy immediately the receipts from the bank. Okay? Because such receipts are not only deposits in the bank. For example, credit memos. Sometimes the bank will put 2.3 million on the receipts. The same with our example, loan proceeds. Okay? So those loan proceeds are included here, but those are not considered as deposits in the bank. Okay? You have to eliminate that 2.3 million. You just focus on any collections of the company that were recognized by the bank. You don't include those additions by the bank in the receipts because there are errors, because there are credit memos. You don't put that. Okay? You just focus on entries because you can look at the passbook. What are those deposits there coming from the company? Okay? So those are the deposits recognized in the bank. So for example, the deposits recognized in the bank is 5.2. So you have deposits in transit ending. So that's what we have in the books. And of course, in the outstanding checks, you have outstanding checks beginning plus checks written. So on the disbursements of the books, you focus on the checks written only. Like for example, this is 50,000. The checks written is about 2.5 million. So you have 2,550. Checks written only. You don't include any other items that were put in the disbursements which are not basically checks written. Example, there are service charges charged by the bank last December. You did not know about it last December. So, since it's already January, you put that in the disbursements. Actually, you did not include those things. Okay? Because outstanding checks, we are looking for the outstanding checks ending. Okay? The checks that were not yet encashed by the payee. Okay? So, this is checks written. So, you have 2,550 checks to be paid by the bank. Less checks paid by the bank. I'm sorry for my penmanship. I'm just so tired. So, for example, the checks paid by the bank is 2,100,000. So, you have outstanding checks ending to 450. Again, the checks paid by the bank should not be coming from the disbursements only of the bank immediately because the disbursements of the bank might include other items which are not really the checks paid by the bank. Example, the service charges that they have charged or the automatic deductions that they made. Of course, uh, those automatic deductions, service charges or automatic deduction for interest, for utilities, that should not be included here because what we need is the checks paid by the bank to get the outstanding checks ending. Okay? Now, since in the past, I am really lazy and looking at this, I do not actually use this. What do? I just reconcile. I put the adjustments. I do the 3 steps. Sometimes I don't do the 3 steps. I immediately go to the adjustment because I could already picture out what did this two do. So after reconciliation, I will just compare the receipts under the bank and the receipts, the total receipts also uh, in the books. And then the difference is already the deposit in transit. So meaning, if in the books, the receipts, for example, is 5 million and then the receipts for the bank is only 4 million, the deposit in transit is immediately 1 million. That's how I do it. And on the outstanding checks, I just compare the disbursements. The disbursements total in the bank versus the disbursements total in the books. And if the books are higher, the difference is the outstanding checks immediately. But if you wanted to have this, you can do so. Okay? And lastly, if the adjusted balances, if for example, in our example, as you can see, we have 2688 both books and bank, and the receipts are the same, both books and the bank, as well as the ending balance are the same for books and the bank. They're the same. Okay? What if they are not the same? After reconciling, um, the ending balance, for example, in the bank is 1,818,450, but in the ending balance in the book of records and in the records of the company or the books or the general ledger, it's 2 million. Which will you follow? What will you follow is the adjusted bank balance, the 1,818,450. Okay? The the higher part. Okay? It's because it's much more reliable. The bank records, which are adjusted for deposit in transit, outstanding checks, and bank errors, they're actually more reliable than the adjusted book balance. Okay? And if ever there are differences, especially if ever, again, on the books, the adjusted book balance after you have adjusted it is 2 million, and then the bank is 1,818,450. Normally, the difference is considered a shortage. There might be some people who are getting money from the company illegally. Okay? So, this usually happens if ever the bookkeeper is also the cashier, because the bookkeeper should have been on the recording function only, not on the custody of assets. But if it happens, usually there are shortages like that. Okay? So that's one reason why bank reconciliation is very important, to establish the right amount of cash and also to make entries just like this one, to adjust the other accounts also, to adjust the cash and the other accounts, as well as to know if ever there are losses because of theft. Okay? So, that's it. That's it for now. Let's talk about petty cash fund on the next video. But today, I'm just happy that we did the bank reconciliation. So you can play and replay this video multiple times to get the lesson. So thank you for watching, and if you learned, please click like, subscribe, and hit the notification bell. And see you on the next one. Bye-bye.